Imagine a world where entrepreneurs, freelancers, and remote workers have the perfect space to collaborate, create, and grow their businesses. A place where creativity flows, networking thrives, and companies can scale without worrying about office leases or overhead. Now, picture that this perfect world was sold to the public by a company valued at $47 billion. Sounds like a dream, right? Well, that dream turned into a nightmare for investors, employees, and the founder of what could have been a revolutionary company. This is the story of WeWork, the once hot startup that went from a billion-dollar dream to a cautionary tale of how greed, hubris, and a flawed business model can bring down even the most promising ventures. The dream, a new era for workspaces. It all started in 2010 in a small office on the outskirts of New York City. Adam Neumann, a charismatic and ambitious Israeli entrepreneur, had a bold vision to change the way people worked. He wanted to create more than just a co-working space. He wanted to revolutionize the entire office experience. A place where young, energetic entrepreneurs, startups, and even established companies could come together, collaborate, and share ideas, all while paying a fraction of the cost of a traditional office lease. And so WeWork was born. From the very beginning, WeWork wasn't just about renting desks, it was about cultivating a culture. Neumann and his co-founder, Miguel McKelvey, with their combined energy and big ideas, marketed WeWork as a new way of working. The company's mantra was community, and their goal was to create an environment where creators could thrive. At first, it wasn't just about the space, it was about a new movement in the world of work. The idea resonated with people. The need for flexible workspaces was growing, especially as more people began freelancing, working remotely, and building small businesses. The old stiff corporate office model no longer seemed relevant, and WeWork capitalized on this cultural shift. The rapid expansion, a global dream. What happened next was nothing short of meteoric. With its sleek design, open spaces, and hip atmosphere, WeWork quickly became a favorite among startups and small businesses. From New York to San Francisco, and soon to London and Tokyo, the company expanded at lightning speed. By 2015, WeWork had become the largest private office space provider in the world, and investors were falling over themselves to pour money into the company. WeWork was worth billions. The company raised round after round of funding from high-profile investors, including SoftBank, one of the biggest venture capital firms in the world. Adam Neumann, with his magnetic personality and confidence, played the role of the visionary CEO, and the market couldn't get enough of him. Neumann and his team made it look easy. They took a simple idea, flexible office space, and turned it into a global empire. They expanded rapidly, acquiring companies, opening new locations in cities around the world, and building an aura of success. They weren't just selling office space, they were selling a lifestyle. They made working from a WeWork feel like being part of something bigger, something that would change the world. By 2019, WeWork's valuation had skyrocketed to $47 billion, a valuation higher than many established companies in other industries. The world seemed to be in awe of the WeWork magic. It was the epitome of Silicon Valley's move fast and break things mentality, a mantra that made the tech industry famous. The cracks begin to show, the first signs of trouble. But just like every high-flying startup, the cracks began to show. The problem? WeWork wasn't really a tech company. It was a real estate company, and real estate is a fundamentally different beast. While WeWork sold the dream of community and flexible workspaces, it still operated on a model that required long-term commitments from landlords and high operating costs. To grow, WeWork was leasing office spaces on long-term contracts, then renting them out short-term to customers. But the price disparity, high long-term rent versus low short-term rental income, wasn't sustainable. The company was losing money hand over fist. In fact, by 2019, WeWork was hemorrhaging cash at an alarming rate, $1.9 billion in losses in just the first half of that year. But that wasn't the only issue. As WeWork expanded, it also began to accumulate an embarrassing number of failed ventures and questionable business moves. The company invested in everything from education initiatives to a mobile app for meditation. None of these side projects were turning a profit, and they were distracting from the core business. It became clear that WeWork wasn't just a co-working space anymore. It was a bloated mess of ill-conceived side projects. Adam Neumann, the charismatic leader, with a cult of personality. Here's where the drama really unfolds. Adam Neumann, the face of WeWork, was charismatic, charming, and deeply visionary. At least, that's what everyone thought. But behind the glitzy facade, Neumann's leadership was under increasing scrutiny. For one, Neumann was known for making questionable decisions. Decisions that, in hindsight, seem more driven by ego than by sound business strategy. In one particularly bizarre move, he trademarked the name We, as in WeWork, and reportedly even charged the company millions of dollars to lease the name back. His penchant for lavish spending also raised eyebrows, from a private jet to extravagant parties. Employees and investors began to question how much Neumann was enriching himself versus building a sustainable business. Neumann's behavior also became erratic. He famously claimed that WeWork was more than a company, it's a movement, and even said that he envisioned the company as a global community that would revolutionize the very way people lived and worked. Some began to see his ambition as borderline delusional, maybe even a little dangerous. But here's the thing, Neumann's cult of personality was still working. Investors continued to pour money into WeWork, believing in the vision he had sold them. The company was still growing, and people were still signing up, but the signs of trouble were growing harder to ignore. The Icarus moment, the IPO disaster. The fall came swiftly and dramatically. In 2019, WeWork made the decision to go public. They filed for an initial public offering, IPO, to raise more capital and continue their expansion. But instead of the smooth, polished debut that was expected, everything started to unravel. The IPO filing revealed WeWork's true financial situation. The company's $47 billion valuation seemed absurd when it was clear that it was losing billions, with no path to profitability. Neumann's outlandish personal expenses and erratic behavior also came to light. Investors were shocked. Instead of the promising, world-changing company they had hoped for, they saw a company with a massive valuation, questionable finances, and an unpredictable leader. The IPO was pulled, WeWork's valuation plummeted, and the company's reputation was in tatters. Adam Neumann was ousted as CEO, and the company was left scrambling to salvage its future. The aftermath, from billion-dollar dream to bankruptcy. After the failed IPO, WeWork's troubles continued to pile up. The company had to scale back its expansion plans and make deep cuts to its operations. It became clear that the dream of becoming the next Amazon was, in fact, just that, a dream. In 2020, SoftBank, which had invested billions in WeWork, stepped in and took control of the company. Neumann, the man who had once been at the helm of the greatest startup in the world, was pushed out, and WeWork's new leadership team was left with the task of picking up the pieces. WeWork tried to pivot, cutting costs and focusing on what it did best, co-working spaces. But the damage had been done. The company's once high valuation had been obliterated, and its business model, based on leasing expensive real estate and hoping people would continue to pay inflated rents, was no longer sustainable in a post-pandemic world where remote work became more the norm than the exception. Lessons learned, greed and hubris at the heart of WeWork's demise. So, what went wrong? How did a company that was once on the verge of revolutionizing the way we work collapse so spectacularly? It boils down to a few key factors: greed, hubris, and a flawed business model. WeWork's leaders were so focused on growth and hype that they ignored the fundamental realities of running a sustainable business. They were spending money recklessly, inflating the company's worth, and living out an entrepreneurial fantasy that ultimately turned into a nightmare for employees, investors, and the brand itself. In the end, the rise and fall of WeWork isn't just the story of a company, it's a warning, a cautionary tale about the dangers of unchecked ambition, the allure of a charismatic leader, and the consequences of overhyping an idea without the fundamentals to back it up. WeWork may not have changed the world in the way Neumann envisioned, but its spectacular collapse changed the startup world forever. It showed us the risks of chasing a billion-dollar dream without a solid foundation.